The company's electric vehicle plan is on track as well.
All right, we'll have more on that story a little later. Pramod Gubbi is co-founder at Marcellus Investment Managers. He's joining us now to take some questions. Pramod, great to have you with us here. Thank you very much. As we kind of go through this year, wind this year down, I mean, there are lots of surprises coming our way. And I want to start with one name, Pramod, which, of course, you guys have owned for a long time as well, which is GMM Pfaudler. The recent news flow on GMM, of course, and the price saw a sharp dip. How did you read this entire sequence of events? I think in November we had in the conference call the management of GMM Pfaudler saying that they have an agreement for 3 years where they stay put. There is no sort of question of selling, etc. And now we got this recently. How did you look at this, and have you done anything with your holding?
No, not really. I mean, we see this largely as a non-fundamental event, right? It doesn't affect the fundamentals of the business in any which way. It is, as far as we're concerned, one financial investor paring down their holding on pretty much expected lines. Now, whether it's 3 years or 2.5 years is a moot point. But by and large, a financial investor, particularly a private equity fund, has a limited life of the fund, and therefore everybody expects them to exit when they've made their gains. They've been invested since 2014, if I'm not wrong. So it's almost an 8-year holding. Any financial investor would be looking to exit. And that exit has happened. It's not a full exit, but I reckon if you look at it from the perspective that 17% of shares outstanding were sold at a 10% discount or 11% discount, is not a bad deal, which means that there are buyers for as much as 17% of the company at those levels. There's another 13% to be offloaded. It may happen tomorrow. It might happen over the next year or so. It's up to the financial investor. But from our perspective, like I said, there is no impact on the fundamentals of the company. Secondly, it shows that there are buyers for the stock at these levels for as much as 17%. So, I mean, we've done block deals when we were on the sell side. If you want to sell that much of a company, that much discount to the current share price is par for the course. So, no change in our stance. We continue to remain happy shareholders of GMM Pfaudler.
Pramod, morning. Rima here. You're looking at IT. I think recently you all invested in Infosys as well. TCS is another holding of Marcellus Investment. Tell us what you expect from the technology space.
Yeah, so I think there's a little bit of weakness in the IT stocks because the market tends to be short-term oriented. Yes, there is a recession in the West, which is the large buyer base for the Indian IT services industry. There will be some slowdown in terms of top-line growth and deal flow, but that is what we look out for. So this is an aberration. If you look at the bigger picture, everything around us is getting digitized. It's very difficult to see why Indian IT services will be of no use in the long run. We reckon that with the advent of AI, ML now, and also early penetration in terms of shift towards cloud computing means that the long-term growth runway for the industry is fairly intact. We look for these times of weakness, and we got into Infosys, another stellar company in the sector. We already own TCS. The reasons that we've gotten into these two is not so much the demand. The demand perspective is pretty intact, like I said, but they differentiate themselves on the supply side. We saw over the last 2 years when we had the whole tech boom during COVID, we had a significant run for talent in the industry. People had to end up paying 30-40% wage hikes. We saw margins getting crunched for pretty much the entire industry. But these two companies stand out in the sense they have invested over many decades in terms of developing training infrastructure. There's a supply side constrained industry. So you will have bouts of what we saw the last 2 years. So unless and until you are able to train and retrain tens of thousands of employees in upcoming technologies year after year, you will see your margins coming under pressures. Therefore, we've chosen the two who have perhaps the best supply side in Indian IT services. And like I said, the demand is intact from a long-term perspective.
Are you exploring investments in other IT names, or would you continue to stick with these two, Infi and TCS?
No, we're always on the lookout for new ideas. Never say never. We do take a long time before we get the sort of conviction that we need. We tend to hold concentrated portfolios. Therefore, the conviction levels required to buy into a stock are significantly high. That requires a lot more in-depth research and perhaps longer time. Yes, that means that we do need that patience. We're happy to be patient in finding new ideas. So we'll continue to do that. But for now, I think we're quite happy with these two.
Pramod, morning, Nigel here. Pramod, the last time we chatted, I think you all were doing some bit of a study. You all were giving a look at Nykaa. Though Zomato you all mentioned didn't pass muster. What's the update out there? Have you all got into any of these new age themes, so to call it?
No, not really. I think the concerns remain the same on Nykaa as well. So like I mentioned, we do think it is a decent franchise, one of the rare few new age companies which have been built with very little capital infused, unlike the norm, which is you burn more capital to gain market share. We are not fans of that type of franchise building. Nykaa is an exception which attracted us to them. So we've been looking at it. We've been digging deeper in terms of trying to understand the sustainability of moats there. It is a young company, no doubt. So we'll have to see multiple cycles of this to see how the moats hold up. Because the industry, they are first movers in an industry which eventually will attract competition. We want to see how the franchise fares in the face of competition. Remember, a core part of our investment philosophy is sustainable competitive advantage. And like I said earlier in the call, we tend to take a long time to give ourselves the conviction. Because remember, we're not investing for the here and now. We would like to get conviction that the franchise will hold intact over the next couple of decades, which means that cash flow growth has to be healthy for that much long, which in turn can underpin a valuation that gives us the margin of safety over the current stock price. We're not there yet in terms of Nykaa, but we'll continue digging deeper.
All right, we'll leave it there. Thank you very much, Pramod. Appreciate you joining in, and good luck to you and your team at Marcellus. In case we don't speak again, wishing you all of